Hey, good morning, everybody. Today is Thursday, March 12th, 2015. My name is Cliff Backus. I am the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. Stocks sputtered an indecisive trade yesterday as the large cap S&P 500 and the NASDAQ Composite closed lower, while the smaller cap S&P 600 and the Russell 2000 pushed higher. Let's take a look at the NASDAQ Composite. Yesterday, the Composite was down 9.86 points, or 0.20%. We closed in the lower half of our daily trading range. Bulls would have preferred to see us close higher in the range. Trading volume was below the prior day. It was about average. Right now, we are indicating a market in transition on our 1 to 6 month timing model. The NASDAQ is currently in an uptrend under pressure. We've been in a confirmed uptrend since January 8th. Right now we have 4 distribution days on the NASDAQ. All of those came in the past 2 weeks. NASDAQ right now is bracketed by support in the 4811 area and resistance in the 5009 range. I would expect, if this market is true to form with the rallies over the past year and a half, that this market will undercut this 4811 area before going on to make new highs. Right now we're cautious, but still bullishly optimistic. Let's take a look at the S&P 500. S&P was also down yesterday. It was down 3.92 points, or 0.19%. S&P also closed at the bottom of its daily trading range. Trading volume, which doesn't show up today for some reason, was below the prior day. Right now, our 1 to 6 month timing model on the S&P is giving us a don't buy signal. We'll talk a little bit more about the 1 to 6 month timing model signals after this presentation. The S&P 500 has been a confirmed uptrend since January 9th. Now that confirmed uptrend is under pressure. We've had 4 distribution days on the S&P in the last 2 weeks. S&P is bracketed by support down here in the 1992 range and minor resistance in the 2094 area. Taking a quick look at the MACD histogram, we see that the MACD histogram isn't getting any better. Yesterday, it closed below the 0 line. Our histogram is in a definite downtrend because we are below the 0 line, which is bearish, and we're in a downtrend, which is bearish. Our immediate term bias on the S&P 500, as well as the NASDAQ, are bearish. Before we go on to talk about our 1 to 6 month timing model, I want to talk about LinkedIn. LinkedIn Corporation provides a social networking platform enabling members to share their professional identity online via LinkedIn.com. LinkedIn is putting in an absolutely perfect 3 weeks tight base here. If the stock was to break above the top of this base, which is 276.18, on above average trade, it would become a buy here. Especially if you already own the stock, it would be a perfect place for an add-on buy. Aggressive traders can buy the stock on a move above the 276.18 level. Notice how the volume, as the stock has developed its 3 weeks tight base, has dried up. Ideally, what we want to see is LinkedIn break out of this box that I've set up here on at least 140% of average daily volume. Okay, let's talk about our 1 to 6 month timing model. Okay, what I want to do is talk about our 1 to 6 month timing model. In his classic book, How to Make Money in Stocks, William O'Neill explained that 75% of all stocks are going to go the same direction as the market. That being the case, it's very important that we understand what direction the market is headed and what to do about it. In his book, O'Neill identifies 3 states in which the market can be. The first is a market in correction. The second is a confirmed uptrend. And the third is an uptrend under pressure. In our system, we break it down into 6 possible states of the timing model. The first is margin, aggressive buy, market in transition, don't buy, and sell. First, I want to talk about the margin signal. The way that a margin signal is determined is our 10-day simple moving average has to be trending higher. Our 21-day exponential moving average has to be higher than it was 2 days prior. The index has to be trading at least 1% above the 21-day EMA. And the Ramosi Greater Moving Average indicator, which is an indicator that I developed several years back, has to be trading above 0. What do we do with a margin signal? Well, with a margin signal, all traders can buy aggressively. Stops should be at normal levels, and we want to replace weak holdings with stronger ones. Aggressive traders can use margin in their portfolio to leverage their portfolio, and they should utilize very strict stop discipline. An aggressive buy signal, the 10-day simple moving average has to be trending higher. The 21-day exponential moving average has to be higher than it was 2 days prior. The index has to be trading less than 1% above the 21-day EMA, and the Ramosi Greater Moving Average indicator has to be greater than 0. What an aggressive buy signal means? All traders can buy selectively. Stops at normal levels, replace weak holdings with stronger. Aggressive traders can buy aggressively, but we're not going to increase margin to leverage positions. We want to prepare a watch list for margin purchases, and we want to keep our stops at normal levels. A buy signal. The 10-day simple moving average has to be trending higher. 21-day exponential moving average has to be higher than it was 2 days prior. The index has to be trading at least 1% above its 21-day exponential moving average, and the Ramosi Greater Moving Average indicator should be below 0. What do we do with a buy signal? All traders can buy long positions, stops at normal levels. We want to replace weak holdings with stronger ones. Aggressive traders can buy aggressively. Don't increase margin on positions, stops at normal levels. Market in transition. Market in transition, the 10-day simple moving average is trending lower. 21-day exponential moving average is lower than it was 2 days prior, but the index is trading less than 1% below its 21-day exponential moving average. What to do with a market in transition signal? All traders can very selectively buy solid positions. Stops should be at tight levels. We want to reduce weak holdings, and we can consider hedging portfolios with ETFs. Aggressive traders should buy aggressively. Reduce margin. You should have your stops at tight levels and consider hedging your portfolio with ETFs. Next signal is the don't buy signal. A don't buy signal is triggered when the 10-day simple moving average is trending lower, the 21-day exponential moving average is lower than it was 2 days prior, and the index is trading at least 1% below its 21-day exponential moving average. What to do with a don't buy signal? Stop buying. We're going to stop buying all long positions. Stops should be at their tightest levels. We're going to sell any position that, if stopped out at our normal stop level, would result in a loss. And we're going to consider hedging our portfolios with contra ETFs. Aggressive traders should stop buying long positions. They should be completely off of margin at this point. Stops should be at their tightest levels. They should sell any position that, if stopped out, would result in a loss, and consider hedging their portfolios with contra ETFs. And our final signal is a sell signal. A sell signal, the 10-day simple moving average is trending lower. The 21-day exponential moving average is lower than it was 2 days prior. The index is trading at least 1% below its 21-day exponential moving average. The index is trading below its 200-day simple moving average. What do we do with a sell signal? All traders should stop buying long positions. Stops should be at your tightest levels. Sell any position that, if stopped out, would result in a loss. Hedge your positions with contra ETFs. Aggressive traders should stop buying, should be off of margin, and can short individual stocks. Stops should be at their tightest levels, especially on short positions. Sell any long position that, if stopped out, would result in a loss, and hedge our portfolio with ETFs. If you want to talk about our 1 to 6 month timing model, about the markets, or any of our trading strategies, please feel free to give me a call. Drop me an email, or if you'd prefer, make an appointment. Stop by the office, see what we're up to. If you're out of the area, we can set up a Skype session, see my contact information on the homepage. If you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place. And I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate, or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.